Alright, let's cover the basics first. Here we'll learn some theoretical concepts and get a hang of the terminology involved. In terms of definition of accounting, you can think of accounting as a common set of rules followed by businesses to capture financial transactions in order to prepare the financial statements which help in assessing the financial position and performance of the entity. So position is captured by the balance sheet, whereas the performance is captured by the P&L. All right, the second concept that we are going to learn is called the accounting cycle. So accounting cycle is a complete process which starts with a transaction followed by entries in journal, ledger, the preparation of trial balance, and eventually ends with the preparation of financial statements such as balance sheet and P&L. So since it starts with the transaction, let's understand how do we capture a financial transaction. To capture a financial transaction, there are always two entries are involved. There are always two parties involved. Therefore, we call it a double entry system. One entry will be called debit and the other as credit. You can think of debit and credit as plus or minus or plus, depending on the account involved. So for certain type of accounts, debiting it would mean we are increasing its balance, whereas for the others, it would mean the reduction in balance. The first thing that we do is to record it in a journal. So what exactly is this? So a journal is essentially a record keeping book wherein we store the transactions that are happening in a chronological fashion. Let's say for example, there is this ABC Bank. On day 1, the promoter of the ABC Bank comes in, let's say his name is Ram, and he deposits cash of, let's say, 100 crore rupees. On day 2, the bank gives loan to XYZ company in cash of 2 crore rupees. Let's say on day 3, the bank incurs an expenditure and buys insurance by paying a cash of 1 crore rupees. So all those three transactions are getting sequentially captured in a register which is called as journal. So we are recording the transaction in the journal as the first step. Now here comes the next step. The next step is to post them in the ledger. Ledger, which is also known as general ledger or GL, you can think of it as a register where each entity or the things involved, we saw in the journal the entities involved. There was Ram, there was cash. In the second transaction, there is this XYZ company and then there is cash. In the third example, there is insurance and there is cash. So all these accounts that we are looking at, these will have a separate head in this journal ledger. You can think of this ledger as a register where each entity or thing involved has a separate page or separate account statements. So in this ledger, all these entities or things which will be separate GL accounts and each of them will have a account number. So these accounts are same as the accounts that we have in the banks. Let's say you have a deposit account, you will see all those debit and credit entries and a net balance at the end of it. So these account statements, these GL account statements will all have all the debits and the credits related to this entity or thing and the eventual balance. So all the transactions that were related to Ram that have happened so far will find a place in. So broadly speaking, there are 5 categories of accounts. First is capital, second is liability, third is assets, fourth is income, and the fifth is expenditure. So all the entities involved in any transaction will be any one of these 5 categories. So in the first transaction that we saw, that wherein the Ram contributed capital in terms of cash, there were 2 accounts involved. One was capital, the other was asset in terms of cash. In the second example, wherein we gave XYZ company a loan of 2 crores, Again, there were two accounts involved, cash and advances, which was part of assets only. In the third example that we saw of insurance, it was part of expenditure account. So broadly speaking, all these accounts that we see in transactions will fall in any one of these categories. So if we were to compare the journal with the ledger, journal itemizes financial transactions by date, whereas the general ledger is a record of financial transactions by account. The next step in the accounting cycle is the preparation of trial balance. Trial balance helps us look at the business as a whole at any point in time by combining all the accounts from the ledger and arranging them in a T format. In this, left side is called the credit side and the right side is called the debit side. It also helps to check if all the credits on the left hand side are balanced by the debits on the right hand side, and hence the name trial balance. So we know in any transaction there is this credit side and debit side. So the trial balance helps us to check if the summation of all the credits that have happened so far in all the transactions equals the sum of all the debits that have happened in all the transactions. Hence the name trial balance. You can also think of trial balance as an expanded form of balance sheet where net profit is segregated into income and expense. Alright, let's explore the structure of the trial balance. Just remember that the left hand side is called the credit side, which will have all the accounts related to liabilities and income. For example, capital, reserve and surplus, deposits, borrowings. These are all the liabilities. Then you will see interest income, non-interest income. So these are part of income and this is liability. So the credit side has both types of GLs, the liabilities and the income. Whereas when you look at the debit side, which is the right side, you will see accounts such as cash, the bank balances, investments, advances, fixed assets. These are all the asset accounts. And then you will see accounts such as interest expense, non-interest expense, tax expense. These are all the kind of expense GLs or the expense accounts. Alright, let's quickly look at few ground rules which will always help you. So remember the left side is the credit side. So all the accounts which you see on the left hand side, which is all the liability accounts and the income accounts, the balance that they will have will always be a credit balance. Whereas all the accounts that you see on the right hand side, that is all the assets and the expense accounts, will have debit balance. So always remember this very simple but very important rule, that is on the left hand side, which is the credit side, which has all the accounts related to liabilities and income. So all these accounts will increase or their balances will increase if we credit them and their balances will decrease if we debit them. And the exact opposite is true for the debit side, that is all the accounts related to assets and expenses, their balances will increase if we debit them and their balances will decrease if we credit them. Let's say if any depositor comes and deposits 100 rupees. So we know that deposit is going to increase by 100 rupees. So what we are going to do, we are going to credit the deposit account by 100. Whereas on the right hand side, since we have received cash and therefore it has increased, so we are going to debit it by 100 rupees. Alright, just so that you do not forget, all the accounts on left will have credit balance and this balance will increase if we credit these accounts and will decrease if we debit these accounts. Whereas all the accounts on the right hand side will have debit balances and this balance will increase if we debit it and will decrease if we credit it. Okay, one more thing. People often get confused which side is the credit side and which side is the debit side. It's hard to remember and it's easy to forget. So you can remember it like this. Alphabetically, C comes before D and we write from left to right. So the left side will be starting with C, the credit side, and the right side will be debit side. You can think of trial balance as the combination of balance sheet and P&L, wherein the P&L has been segregated into income side. So all the accounts related to income will be on the left hand side and all the accounts related to expense will be on the right hand side. So whenever you look at trial balance of any bank, you'll see that all these accounts that are there, they will have a account code, which will be a numerical code. Let's say 999123. So this might have 999124. So all these codes will be there. So whenever you want to look at the all the debits and credits that have happened in this account, you'll have to say bring me the account statement of this GL 999123. Then you'll get all the transactions that have happened in the capital account, because in the trial balance you'll only see the net balance, which will be a credit balance. Let's say in capital total credits were 90 and total debits were of 70. So what we'll see here is net 20. To look at all the transactions that have happened, we'll have to look at the account statement, which will have a unique numerical code. Also, one more thing to remember is that, so as there are GLs, let's say a bigger GL deposit will have many sub GLs, which could be, let's say, current account, saving account, fixed accounts, recurring deposits. So all these will be sub GLs of this one bigger GL, which is deposits. So these will have their own codes and own account statements. So you might see as a single balance in terms of deposits will have, let's say, 200 crore balance. But if you want to look at all the details that are there, let's say you want to look at how much of FD is there, then you will ask for the sub GL account statement of the FDs. Okay, let's discuss one more concept quickly. What happens to this income and expenses? At the end of the year, there would have been some income there and we would have incurred some expenditure. Let's say the total income was 120 and total expenditure was 100. So at the end of the year, we'll have a net profit of 20. So what will happen to this 20? This net profit will have two possibilities. Either it will go out as dividends or it will get retained here in terms of reserves, the item that you see here. Let's say part of it is, let's say dividend was distributed as 5 crores and 15 crore was retained. So the 15 will get distributed or appropriated within this reserves. So before AGM happens, you will see a balance of 20 on the credit side in the net profit GL. And when the AGM happens, the decision is taken as to how much will go out and how much will be retained and in what proportion it get distributed across the reserve items that are there. It could be statutory reserves, it could be your building fund, it could be your IFR. So once AGM happens, that decision gets taken and this gets appropriated or distributed across the reserves. And this cycle repeats every year. Also, one quick tip to remember that this trial balance will always be balanced no matter what. So if any transaction or if any credit happens of X amount here, a debit will happen on the same amount on the right hand side. But this does not mean that action will happen on both the sides. So there could be case wherein both the accounts of the debit side were involved or both the accounts of the credit side were involved. Let me give you a few examples. Let's say a depositor came and it deposited cash of 10 rupees. So his balance on the credit side will get increased by 10 and on the debit side or in the right hand side, the cash will get increased by 10. So the trial balance is tallied. Another example where both sides are not involved could be, let's say when I bought a fixed asset, let's say I bought a building for 5 crores, so I will increase this fixed asset here by 5 and reduce my cash by 5. So you see, only debit side was involved. Alright, let's discuss one more point. So it's not necessary that accounts that you typically see on any side, let's say credit or debit side, will always remain on that side only. For instance, in case of CC accounts, although this is an advance that we are giving, let's say a borrower took a 10 crore rupee loan, but there could be cases, let's say in his account some credit transactions happened. Let's say he deposited more money than he borrowed. Let's say he deposited 15 crores. So there will be net credit balance of 5 crores. This will shift on the deposit sides as a 5 crore credit. Alright, let me discuss a quick point here. On a typical trial balance, you might see a net profit on the left hand side. Let's say in the last example we saw there was a net profit of 20 when we had 100 of income and expense of 80. So there was net profit 20 and we saw that net profit on the credit side. But there could be a scenario that we had more expenditure than income. Let's say if this was 130 expenditure and 100 income, so there will be a net loss of 30 rupees. So you might see this P&L account that you are typically used to seeing on the credit side shift to the debit side. This is entirely possible. This happens in advances as well for CC accounts, wherein the borrower deposits more money than he had borrowed. Let's say he borrowed 10 crores and he later deposits 15 crores. So this will become a deposit account with a credit balance of 5 crores. Alright, let's quickly summarize what we have learned so far. So trial balance is always tallied or is always balanced. So sum of all the credits will always be equal to sum of debits because each transaction has both the credit and debit sides of equal amounts. And so it always has to tally regardless of anything. So all the accounts that are there, they'll have both the credit and debit entries, but there'll be a net balance. So all the accounts on the left hand side will have a net credit balance. That's why you will see them on the left hand side. So if you wanted to know the details of any account that is there, you'll have to ask for its account statement. So all these accounts will have the account statements which will have all the credit and debit transactions that have happened. Whereas on the trial balance, you will see a net balance. You can also think of trial balance as a tool to capture the story of any business over time. Let's look at the story of ABC Bank. It started with a capital infusion, which was in the form of cash. So this cash was deployed into creation of several assets such as investments, advances, and fixed assets. These typical assets generated some income over the years. So there was this net profit that happened over a year, and this was again either distributed outside as dividends or redeployed to fund the growth of future in the form of capital. Let's say again, to fund the growth you can have depositors. In case of banks, the depositors are like the borrowers which are funding or fueling the growth of bank. You can always take the help of borrowings. So all these events, when they happen chronologically, these get captured in the statement called the trial balance. So the trial balance is nothing but the aggregated summary of all the transactions that have happened over the years and helps us see the financial position and profitability of any entity at any point in time. Typically when we look at a trial balance, we go for the 31st March of any year. So next we are going to discuss the golden rules of accounting. If you don't fully understand them, it's fine. You don't even have to remember them. What we have learned just now would be sufficient to logically comprehend and make all the entries that you would typically see.